if people are looking for what it is that can really make a difference, it's, can you identify what's between you and what you want to get done, and then solve for that and say, okay, everything that's in the way is just something I need to solve for.
Welcome to Business Buying for Financial Independence. I'm Tim Delaney, and I help young professionals buy small businesses so they can escape the 9-to-5 and take control of their time, income, and future. If that sounds like you, hit the subscribe button and let's get into it. Aurelius is a former business banker who left corporate life at 40 and bought a construction equipment manufacturer with his childhood best friend. Welcome, Aurelius Chavez. I'm excited to have you here today on Business Buying for Financial Independence. Look forward to digging into your story a little bit more.
Yeah, I'm excited to be here, Tim. Thanks.
So, obviously, an introduction kind of summarized your life, but rather than make it a 10-second podcast, let's dig in a little bit more and
Sure.
Start a little bit about your professional background and how you got into banking, why you got into banking in the first place.
Yeah. So I graduated college in 2004, and I didn't really like school. I was never much for school. I always did well enough to do well, and I didn't really like the idea of a corporate job at the time. I'm 22 years old, and so there was two of my friends that I went to college with, spent a ton of time with there. They were interning at this webcasting company, and they were doing like live sports and graduations and stuff on the internet. This is 2004, so that's before YouTube. Like, there's no YouTube even at this point. And anyway, we decided to start this company after college, and I did that for 2 years. You can tell that didn't work out, and we kind of go our own ways. One guy decided he needed a job, and one guy decided he wanted to go try and marry a girl who had moved to England for 3 years, and so that was the end of it. So now it's 2006. I have a degree, but no experience. And I'm like, well, where can I get a job? And banks are hiring. It's before the crash. It's before all that stuff. So I just pick up and I move to Boston, Massachusetts, without a job. And I have a job before my apartment lease even starts in the end. And I started some small bank with a dead end job, I would call it, processing operations. And that bank gets bought out. I end up looking for another bank. A headhunter finds me. I move down and I go to Connecticut for a couple of years, right outside New York. I went to Syracuse University. So like a lot of my college friends were down in New York City. So I'd go down there all the time. Actually, my best friend that you mentioned that I owned the business with, he was also living in New York at that time. So I got to see him a lot. You know where this story's going. It's 2007, it's 2008, and the wheels start falling off. I'm at UBS investment bank at that time, and I start getting the itch to move home to Buffalo, where I'm from. And I ended up getting a job offer right at the end of 2008, and I moved home in 2009. So I've been gone for 8 full years at that point, nine full years, including college, and took a job at a bank. And then within a year, realized that was sort of a mistake. It was not a great job. It was, at the time, I really regretted it. I was like, this is too far of a step back just to move home. That was my first introduction to this is your life, and your corporate life, it kind of is defining who you are. I don't know. I didn't really like that. And so I met a guy on a board I was serving on, and he worked at M&T Bank, which is where I ended up going. And then I spent 12 years there. And I identified pretty quickly on, I was in finance, and I realized I really liked the business banking, and I wanted to do that. And so I ended up getting a mentor, such as it is, who was a business banking regional manager, and he's like, well, I know that finance means you understand numbers, but it'd be a lot better if you had credit experience. So I went to the credit department. I did credit for a few years, did the SBA lending, which I learned a ton and then helped me out a lot in the future. And I go back to him and he's like, yeah, okay, good, you got credit. I see that you probably could do sales, but it'd be a lot easier to hire if you had sales experience. Come on. It was a little frustrating.
Constantly moving
This is
the
a job.
finish line.
Yeah, exactly. And I feel this way my whole life, with my parents and then your wife and your kids. It's like, I just like the goalposts just keep moving farther out on me, or the goal line, or I'm just like, when is it enough? So this was a really highly sought after job, especially M&T is headquartered in Buffalo. So becoming a business banker is like a career aspiration there. It's like very few people get that job, at least at the time. And so I did. I'm like, okay, what do? I go and I manage a branch because you get to do business loans. That was a lot of fun, actually. Like as I look back at my corporate life, I did become a business banker. I did that for 5 years, and we could talk a lot about that if you want. It was a really rewarding and enjoyable job, but actually being a branch manager, it was a lot of fun. It's like your own little island. You're a little bit of the king of the castle. And I was in a great town, East Aurora, New York, which is a little insular, and it's got a nice village. Obviously, East Aurora. I'm just sort of describing it. And I really enjoyed that. It was a lot of fun. I did 2.5 years there. Finally, business banker job opens up, and it's under this guy, Jay, who had been coaching me along. I'm like, look, give me another reason that you can't hire me. He's like, no, I think we're pretty good at this point. So I get the job, and I do that for 4 or 5 years. And then this acquisition comes along. And so that's sort of where we got to.
Nice. Yeah, and your position as a branch manager is actually where you and I first met. I had been banking with M&T for quite a while. It's for those of you not in the Northeast, M&T is a very large regional bank that does a lot of business banking, a lot of SBA lending, which we'll dig into in a little bit. But good, solid bank. So like you talked about, you got a job there in 2008. When the rest of the banking world in the United States was falling apart, they hired you, which is pretty cool.
Yeah, I felt really good going there.
Yeah. We're going to circle back to the banking and the SBA stuff, but let's jump into why you decided to get out of banking and what brought you to buying the business. I mean, obviously you had some entrepreneurial bones in your body with the tech company out of college.
XMI Events, it was called.
XMI Events.
XMI, yeah. We were like loosely stood for like next media on the internet. Man, we thought we were cool.
And it probably was just a little bit too early. Had you launched when YouTube was already a thing? Maybe you could have, built on top of that, or who knows? But sometimes the first to do something is not the one that survives. Yeah,
that's true. So I really enjoyed working with business owners like yourself and a lot of other clients in Western New York. And the more I was doing it, I had that bone in my body. Michael, my partner, he and I grew up together, went to kindergarten together. His father owned a small business. And so I saw that all throughout the years, and them packing packages in the basement to ship. And they had a retail location where it was like a Christmas tree store, with landscaping and all that. And he used to talk to us a lot. He was a big influence in my life, especially in like high school, college years, when you just sort of like hang around at your friends' parents. And it was always percolating there. And Michael moved home to Buffalo in 2012, got a job running a local manufacturing, sort of a public-private partnership. And we had always sort of been in each other's ear, and the time was never really right. And so I just felt like I kept learning. But the more business owners I interacted with, a few things became clear to me. I really wanted to do this. I think that I could, and that there was a lot of opportunity in this space. And the more I just dwelt on that, and every new owner I would meet, I'd be assessing it through that lens. And I really love that job. People like yourself, they just throw the doors open. They're like, this is how it works. This is how we make money. These are my challenges. This is what it requires financially for us to succeed. And then I got to say, okay, well, I can help you with that. And it was a really rewarding job. I have an economics degree, and there's some part of me that's like into that whole, it's the grease in the economy angle of it. I see that the matching of creditors and savers facilitates growth. And we weren't saving puppies, but I felt like the work that I was doing, it really mattered to the people. The first time somebody cried in my office because I had secured them a line of credit and they didn't have to use factoring anymore was really, felt really good to me. And I didn't know that that feeling existed, that I could do something like that for somebody as a banker. So there were a lot of positives, but I just became more and more enamored with the idea of owning my own business and feeling like I could do it. I'm a conservative guy. I'm risk averse. I've made a lot of mistakes in life, it feels like. My dad always reminds me of mistakes that I have made. And I think that I got more comfortable feeling like if Michael was with me and we made the right decisions and we structured it correctly, that we were highly likely to be successful and it wouldn't crash and burn. And eventually we looked at a bunch of deals. We started looking in 2020. We started looking, which is a weird time. Mm-hmm. But this was actually the Midland Machinery was the first deal we looked at. And it took 2 years to get done, but we kept coming back to it. Every successive deal we looked at kind of looked through that lens and we said, well, this doesn't look as good as Midland did. It doesn't look as good as Midland did. And there were challenges with the owner along the way, which is why it took 2 years. But it just became the one. And we said, let's get this done. And to dive a little into the story, we had a few stops and starts and we didn't really know where we stood. We had verbal agreements and then ghosted and then verbal, and then we sent an LOI and then we got ghosted again. And then Michael sent, the owner lived in Massachusetts at this point, sent a handwritten letter to his house. It was like, look, we're still interested in this. Like, we don't really understand what's going on, but if you want to get this done, we would love to buy this company, keep it in Buffalo, and let's do it. And then his son reached out to us, and it turned out that that was sort of like the missing piece of the whole puzzle. His son got involved and was like, Dad, you got to do this. And he came up here and met with us. We had dinner with his son, and then a breakfast meeting with the son and the father the next morning. And that's when they're like, okay, this is it for real. We're going to sell you this business. So
awesome.
Yeah. And then we still didn't close for 9 more months.
Yeah. The closing process was long for my simple liquor store years ago. I can't imagine for a larger equipment manufacturer, a lot of moving parts, a lot of assets. Yeah. There's a couple things you touched on that I want to just circle back to real quick. First of all, that power, not power, but like the importance of business banking is a point that I talk about frequently, of not necessarily the banking part of it, but small businesses in the United States are such a crucial piece of the economy. They employ so many people, they keep money circulating in the local economies, and they're just vital. And so to have bankers that understand them and are willing to work with them and having the larger programs like the SBA are crucial to keeping all of that going. So it's awesome that you enjoyed your time there. On the deal side, so the importance of following up, like you said, this was one of the first ones you looked at, didn't really go anywhere. You kept looking at other businesses, but you kept following up with the owner. A lot of people would just say, send a letter, send an email, have a phone call, and then if they don't hear anything back, they just move on and they give up. But that persistence of constant follow-up to get the deal done is super important, whether it's business, real estate, just within your own business, not even business acquisition. Yeah. Follow-up is crucial.
Yeah, I very much agree with that. I think, in fact, I have a friend right now who's going through an acquisition, and I'm waiting to hear from him today. He had another call with the seller this morning who was supposed to close 2 weeks ago. I'm very much feeling his pain, and also I'm happy that I'm not the one in the seat right now with him. But I think that the determination to say, I'm going to get this done is something that not a lot of people have. And I'm not touting my own self here, but if people are looking for what it is that can really make a difference, it's, can you identify what's between you and what you want to get done, and then solve for that and say, okay, everything that's in the way is just something I need to solve for. I mean, how many people do you, and the people who might listen to this, how many people do you know in your life that are, every time you tell them about an idea, they tell you 10 reasons why it won't work? And I, I, I don't really have a lot of patience for that. I see those too. I see what the obstacles might be, but that doesn't mean I can't do it. It's just giving me an assessment of what I need to be able to accomplish to get where I want. I really think that people can do what they want with determination, and it's by far. I remember getting this lecture from one of my parents' friends once 20 years ago when I was a teenager, and he termed it as patience. He was like, the number one key to success in every relationship you have, in business and whatever you do, is to have the patience for other people and patience to do what it takes to get where you want. And I don't know, it really stuck with me. And probably at the time I was 15 or 16 and I'm like, yeah, roll my eyes like, yeah, Uncle Kim, okay. And but man, he was right. He really, really nailed that one.
Yeah, that's patience. I like the term delayed gratification as well,
Yeah,
slightly
yeah,
related, but yeah, being patient with people, being patient with yourself, being patient with the business and the opportunity, and pushing off that gratification to a later date so you can reap a bigger reward is very important. Let's dig into the structure of the deal a little bit, if you don't mind. So you identified it. You guys followed up, kept sticking with it for 2 years to get it done. And you mentioned your childhood best friend is involved as well. What does the partnership look like, and how did you finance and or put together the deal?
sure. So what we did was we did get an offer from him at one point with some seller financing. And one of the things that I think was a great decision we made was to actually reject that offer and say, we'd rather finance this ourselves. Can we talk about a lower price point where you don't hold any note? Because we had, I don't know, we were on our second false start at that point, maybe, and realized that we really didn't want him lingering around, like coming around, hey, just checking in on things, always with that you owe me money lingering over us, right? And so that was a really good decision. It did make it harder to finance. And so we have a third partner, an investor as well, who it's not even fair to him to call him an investor. He is such a partner. Like, he has his own job, a company that he is doing. But the way we structured it was each of us put up a third of the down payment for the business, and then we financed all the rest of it with the bank. No seller, no mezz, no nothing, just full bank debt. And Michael and I signed for the debt. And so we got a larger percentage of the ownership, a noticeably larger percentage, because effectively we brought most of that money to the table. And then Ben, our third partner, he was really only on the hook for his down payment and had nothing else that he could lose. And so that worked for the three of us. We arranged a percentage structure that was 45, 45, 10. Keeps him well out of bank sniffing around about a guarantee. There was some risk that he was just going to put his money in and say, hey, good luck, go do well and make me money. But we had a strong sense that that was not the case. He's our age, and he's been a really great partner. So I'm the only one who works here. I show up to work every day. I get paid to be the president of the company. Michael does EOS coaching, which you're maybe familiar with. A lot of small business owners out there hopefully are familiar with. It's a good system. I don't know if Michael ever listened to this, and he knows that I say this to people. It's a little like a diet. Like, it's more important that you've got a decent one and you're sticking to it. It's a good formula. It's not the gospel according to Gino Wickman or anything. But it's been great for us. We started it at Midland 6 months in, and it has really helped us organize our structure, organize our goals. It's been great for our company. So he does that full time. And then we have what we call like the owner's box meetings, and that's the three of us. And so we get together a lot anyway. We golf. We have an entire Slack, what's more than a channel? I don't know, a whole Slack for just the three of us. And we're talking about Midland all the time, but they pop in the office. I keep them caught up. I send them financials every month. But we're 3 years in now, and their involvement is pretty low at this point. It's something honestly I'm a little proud of, that I raised my hand and said, by the way, guys, I want to quit my job and go run the company. And Ben was a little skeptical of that. Not of me. He never gave me any sense he was skeptical of me. So if he was, he hit it well. But he's like, really, like you have this job that you love, or like you really worked hard to get to. And he's like, you're going to leave that job for this unknown on day one? I'm like, yeah. In fact, I'm going to quit a few weeks before closing so that I could be ready on day one. Which I did. And then I put in my 2 weeks notice, and the next day the closing was delayed 2 more weeks. And that was almost stressful. But, they've really trusted me with it, and I'm forever grateful to them. Like, they're the first 2 guys who really believed in me the way that I felt like I believed in myself. And it's a great thing that we have. There's no amount of overstating how important it is to have a good, trusting relationship with your partners. And some people will tell you never get into business with your friends, and some people will tell you it's really important to be with somebody you know and trust for a long time. I think some of it's just personality and fit, but trust, it has to be first and foremost.
Yeah, trust is definitely the key in that type of relationship. And also, whether you get into business with friends or not friends or whoever else it may be in a partnership, it's important that you bring some complementary skills to each other. You talked about you're there running the day-to-day operations, making decisions on a day-to-day, and Michael has that EOS background and knowledge that can help you implement that, because sometimes it's not, from my understanding, not super easy to implement as the person that's also managing the whole business day in and day out. So as long as you have it structured correctly, and I'm sure you guys have all the legal documentation and agreements, or some people like to call them operating disagreements, because the only time you ever seem to use them is when there's a problem. But as long as you're all set up in that regard, partnerships can be a great way to move further, faster. And it sounds like that has worked well for you.
Yeah. Yeah, absolutely. I would never want to be in business without them. Like, I just picture the 3 of us doing more together, and it's worked out so well.
Yeah. And then you also, so the interesting thing about like an acquisition like this, when somebody's buying a business, is there was room in the payroll or in the expense column to hire somebody to run the company day to day. So you guys made the decision that Aurelius is going to step into that role and run the business, or you could have kept your day job and you guys could have hired somebody else, and the 3 of you could have overseen that person and the company. So there's different ways to manage a business once you buy it. For most of my listeners, it's usually a situation where they probably want to jump in and do something different. They're trying to get out of their job, but you don't always have to leave. And if you buy right and make sure that there's going to be room for that salary, whether it's you take it yourself or whether it's pay somebody else, then the business can run itself while you strategically think about growth as the owner.
Yeah, I think that's a good point for people to consider. And I think that an important thing to do when you're looking at a business, you're looking at the financials, there's all these parts of due diligence, but you have to have a really honest assessment of what the current owner is doing on a daily basis, how much work that is. I was just talking to somebody who's looking at acquiring a flooring company, and there's like owners, we're making this much profit, but he's paying himself this really low salary, right? And I'm saying to this guy, like, look, when you buy this business, like, you get paid double what the owner is taking home right now. He works at the company, is in a sales role. I'm like, you're making double what this guy is making. Like, so which is it? Are you going to hire a sales guy and pay him what you're getting paid? Or are you going to start living on half this salary? Or are you going to adjust your salary to what the president of the company's salary really should be? And now look at the profit of the company. It's a lot less, isn't it? And is it really worth what he wants you to pay if this is your new profit number? So I was digging in with him. I'm like, how many hours is this guy here? Does it feel like he's walking around and just shaking hands? Or is he doing 40, 50, 60 hours of work? And then picture yourself with paying a guy doing what you're doing, and you're doing what he's doing. And it turned out that it wasn't worth what the guy was asking. And, I'm curious, I haven't heard an update on that in probably 4 or 5 months. I wonder where it's at. But it was overpriced. It was really overpriced because of that reason. And it's not really something you would have, if you're just looking, everything starts with the P&L and the balance sheet, everything. But And that's maybe a jaded view coming from a finance guy and a banker, but like, it's the first place to tell you where to look and what you need to know. But you're never going to get that answer off of those pages, right? Like, you have to talk to the person and really discern what they're doing. And I would really encourage people who are looking at businesses, don't just let them tell you, oh, I don't do anything, or like, oh, I'll get this huge salary I make. Like, well, yeah, you're like salarying yourself the profit. Like, there's a lot of ways that people can move the pieces around, and you have to look at both very fairly.
Yeah, that's one of the more complicated things, especially for somebody just starting out and looking at different businesses, is the pieces that, like you said, sometimes it's the owner is taking next to no salary and the profit looks great. Other times they're taking a huge salary and the profit is negative or doesn't look very big. In those cases, I mean, maybe you can talk about that from a banker's perspective as well. It's tough to get it financed when the owners are showing nothing. And those are situations where you might have to resort to seller financing because, they've decided to take from Uncle Sam in the short run by not showing profit. And in the long run, they're hurting themselves because their business technically isn't profitable on paper. That's
you're really spot on with that. The further it deviates from the actuality of what the job is and the pay for that job, the more complicated the financing gets, the more complicated it gets when you want to sell the business. And so people all the time, the scenarios you described are exactly what happens. They're like, oh, well, I'm paying myself all this salary. And we're like, well, yeah, you're paying yourself all that salary. Good for you. I understand that you want to keep your taxes low, but especially for a small business, they're going to look at all your personal debt too. And they're going to say, you have to pay yourself that salary at this point, like, your life has crept up. I see that Porsche payment. Like, you can't just cut your salary by $100,000 a year and say, oh, that's really business profit that I'm taking for myself. That wouldn't work. I see that you can't. Every small business loan that you're going to get, they're going to look at that. They call it global cash flow or total comprehensive cash flow, whatever each bank might call it, but you have to be prepared. And you're going to need to explain the same thing to the seller. And that could be really difficult because the seller, there's a lot of people in small business who are really good at the thing and are not particularly good at small business or business in general, but they're so good at the thing that they make money, and good for them. And I wish them all the best. And I try and emulate those people, but they're not going to understand the concept of like what we're talking about. And so you have to really, it's a delicate thing to navigate with a seller, or when you're dealing with a banker and you're trying to really make it clear how much money the business makes, AKA how much could you lend me? It's a difficult topic.
Yeah. And that's, I think, where the importance of relationships come in. It's a lot of those types of businesses are ideal targets for acquisition because they are profitable and they could be improved with better systems, better management, somebody with a looking at it from an outside perspective. But they're very challenging from you don't want to offend the seller. You don't want to cause any problems. They're worried about their tax implications. So it's developing that trust and that relationship with the seller that can really break through in those situations.
And like we were talking about before, it's sort of like with a partnership, how it's so important to be open and honest. The more you can get out of the seller of like, if you can discern what really their hangups are, it will help you navigate that more. Even if it's something you couldn't directly ask them about, like, well, which is more important to you? Always be listening to what they're saying and what it might be giving you hints at the way they view it or what's important to them. The guy I was saying had a call this morning with his seller. He accidentally had a piece of mail show up at the seller's location that has, the similar business. He had filed his LLC and it's a different name, but got the same name. And the seller is just losing his mind. Like, what is this? Like such a menial thing, right? That just means nothing. And this grizzled old seller is losing his mind. Like, you formed a company with my company name on it already? And like, yeah, of course I did. Like, I need to be able to do business. I had to get insurance. I had to get payroll. Doesn't matter. Yeah. It's now this big sticking point for this guy of like, you're getting ahead of yourself here.
Yeah, that's crazy. Yeah, because you do need to, when you're buying the business, and I've talked about this in the past, like there are steps you need to take before closing day, such as getting your LLC set up, getting payroll systems ready, getting your bank
Yeah.
accounts
Yep.
open. And it's easier to do that with the address that you're going to be
Right.
using.
So you're
But
not going to have to change it all. I would
yep,
encourage people
but
just use your home address or
yep,
any other, get a,
yep.
it's like
Use your lawyer.
$150 for UPS. And the UPS you can use instead of a PO box, you can call it suite number, whatever.
Yep.
It is just so much easier. Do not put that seller's address on anything that you see until after you close and deal with changing all the addresses. It's just easier.
Yep. Great advice. On that note, I guess through your, either in this transaction or your experience at the bank, what other kind of hiccups have you seen, or big sticking points, or like common mistakes that you think buyers should be aware of?
That's a good question. What are the we talked about it before. What are the main things is like the more you have to explain in the financials, the more difficult it's going to be. And if you're a buyer, it's meaning more trust of the seller. You know, the classic example is a restaurant and they're trying to tell you about, oh, we got cash sales, or construction business has the cash heavy businesses. There's maybe not a lot of ways to avoid that. You know, I was at a pizza place once that was for sale with a broker, and the seller was explaining to myself, the banker, and the broker about how he had a separate register. He's like, you know, you can flip it over and I don't know, do something and pull out this. It has like a recorded stuff of like how much cash has gone through it, which is separate from their credit register. And so the more you have to explain to a banker or a buyer, the worse it's going to go. They're just going to discount that somewhere between a lot and all the way. You know, they might say, oh, you know, I travel extra, or I write off I got my mom on the books, or my wife, our seller had his wife on the payroll, and he's like, oh, she doesn't do anything. And, you know, she got a full 401k match. And well, that's true. I'm happy to, if she's really not doing anything, then her salary and her benefits and her 401k match, I'll add that all back, you know, but is she really not doing anything? And I think that's the biggest pitfall is everything moves with dollars, right? You have to have an agreement in your purchase contract, and everything that's got a dollar sign, this is like a cliche thing that people have maybe heard already, where like anything with a dollar sign on it should already be agreed to in your LOI. There shouldn't be any surprises when it comes to numbers. And you don't want to be dealing with last minute changes to dollars with your seller, and you don't want to be dealing with explaining discrepancies to the bank. And the cleaner you can get that. And if you're somebody who owns a business and thinking about selling, I mean, there are people who make a living out of helping you structure your financials just to make it look the best. And I'm not talking about, man, I would never encourage anybody to hide things or do anything like that. But hey, are you paying yourself too much salary? Like maybe you should shift some to distribution and pay yourself a market salary or things like that, to say, hey, get your mom off the cell phone plan or whatever it is, right? Because you know, I bet the listeners have seen the sheets from the broker where it's like the actual P&L, and then there's the changes, and then they're like, this is the everybody wants to talk about the SDE, you know, like this is how much you're really going to be taking home. And people who are buying businesses, a lot of them get enamored with that number. And again, I encourage them to think of like, well, how much are you getting paid to show up, and how much are you getting paid as the business owner just for waking up in the morning, putting your feet on the floor, and having X% of equity in the company. But the more things that are in that changes column, if I'm a banker and I'm looking at that, or if I'm looking at a business to buy, I'm like, I don't like this. I don't want 17 explanations about all these different things. And I think that, you know, you mentioned communication being key. And I think that communicating with your bank goes a long way. People who don't communicate quickly or clearly, or their paperwork's never in order. But I think that that's true for your seller too. It's just like a good sense check in your due diligence of like, how much does it seem like they've got their act together? And if they've got their paperwork and they've got they're willingly sending you things, and it will drive a sense of like how comfortable you could be with the transaction. And the more they're trying to explain why they don't have something, or why it doesn't apply to our business, or you don't need the balance sheet. I had somebody once, the seller tried to tell the buyer that they didn't need the balance sheet. Like, no, like we're not This is a full stop. Like, you're not buying this business. I'm telling you, first off, you're not getting a loan. And second, I'm telling you, don't buy this business if the guy won't give you a balance sheet, if it's off the table. So I always, maybe my conservative nature is showing through, but like, the more I have to be told to swallow some explanation, it doesn't make me feel better. It makes me feel worse. Like, why is it like this?
Yeah. And again, I wouldn't, like, from my perspective, I wouldn't necessarily run away from businesses like that. It's just, you need to be more diligent. You need to be a little bit more careful. You need to open communication between yourself, the seller, the banker, because sometimes that's where the opportunity is buried. It's just like they're missing things, and not that you're taking advantage of it. It's just they didn't feel like it. When I bought my liquor store, I think I created a balance sheet for the sellers, because it was just like, they didn't have it. They weren't financially sophisticated. They, maybe they had something on their tax returns, but I helped where I could in certain aspects so that I could get the deal done, because the other number, it wasn't complicated machinery and equipment and trucks and vehicles that really impact a balance sheet. It was inventory and some shelving that
basically
had no
the inventory
value
is
anyway.
the balance sheet in that business, right? But
So
and people should know that if you're looking, it is always there on the tax return, unless if they're a single member LLC, they can be filing at Schedule C, and there actually is no record of any balance sheet anywhere. So, but if they're filing a separate return, whether it's an LLC or an S corp or a C corp, you go down a few pages past the meat, and that balance sheet will be there. So, if people are looking and the seller's saying, oh, we don't use QuickBooks or whatever, it's there on the tax return. Tax returns can be a little harder to get people to cough up sometimes, but don't buy a business without them.
on that note, I want to circle back to something. You mentioned that all your numbers should be set when you send the LOI. LOI, for those that aren't familiar, is letter of intent. It's usually the step after you've you're going to buy the business. You want to make an offer. It's essentially an offer letter that both parties sign. It's usually non-binding, but it's sort of binding. It kind of locks the two parties in. Are you suggesting that you should be asking for more detailed financials before you send off that LOI? Because I've seen people that are a little hesitant before they have a deal to share tax returns and other super in-depth financials.
That's I think I maybe misconstrued what I was saying there. That's a really good question. What I'm saying is that you don't want to be negotiating a number that's between you and the seller as you're getting close to closing. So, it'll mess up the deal. It'll mess up the bank. It can mess things up. So if you're saying, look, I want to have a $500,000 clawback, you want to have a clause, LOIs are often just bullet points, right? You want to make sure that's in there and say, I want to, and not just we will have a clawback, we will have a $500,000 clawback. You don't want to be negotiating that number later. If you want to have we're going to value AR at 80% rather than 100%. You want to have that number, like whatever it is that's got dollars, that's going to be a number agreed to between you and the seller. Here's what the working capital peg is, which is the amount of net working capital of inventory minus whatever payables are out there. They're leaving you. There's other things in there too, but that's our main one.
Got it. Yep.
You want to have that number agreed to. You don't want to be it be a wrench later where they're like, oh yeah, the clawback can be like $10,000. You're like, this is a $10 million deal. Like it's, it needs to be 500 or.
Okay. So the negotiated numbers, not that I misconstrued that what you're saying earlier. So
that's a good clarification, because I maybe said it wrong there.
And then on those notes, just two things. You use the term AR, which is accounts receivable. For those that aren't familiar, that's the money that the company is expected to be getting in for services or products already delivered to customers. And for some industries or some businesses, they can't count on all of that money coming in for whatever reason. Maybe historically, only 90% of customers pay for some reason. Hopefully it's much higher, but you never know. And so what Aurelius is saying is maybe you're only going to value that AR at 80% because you don't know if all of it will come in. And then the other thing you mentioned was a clawback. Do you want to just dive into what a clawback is and when it should be used?
Sure. So it's a specific clause that buyers will put in sometimes to say, look, over this course of the next 1, 2, 3 years, here are some targets that the company must hit. And if it doesn't, we owe you less money. It's usually tied to a seller note. It's not as likely that the seller is going to walk away with the money and then write you a check 2 years later, because usually revenue is going to be the main thing. Another one to talk about with sellers is if there's really heavy concentration. If I was just working with a guy who was trying to structure a deal where it's basically a one customer deal. It's like 80% of the sales is from one customer, and they've been with them a long time, but there's always that risk that customer takes it in-house or finds some other supplier, and basically that business vanishes. There's one for sale locally that's going into liquidation now that we looked at, that it was a one customer business and the customer dried up. And what if you had just bought that 2 years ago and you've got 8 years left on your SBA loan? So the clawback says, okay, if this customer leaves, we owe you this much less, or you owe us back some amount. Or if these revenue targets, or you can have it tied to certain employees. You can say, we need retention agreements for these employees. And if they don't stay, if they go, God forbid, work for some other company that's our competitor, or work for you outside of a non-compete, you could tie it to whatever you think is important. That the best way to think of it in your head is, what are the things that the seller is telling me are true about the business going forward that I don't totally know will be true? And do I feel so uncertain about those things that I want him to guarantee they'll be true to the tune of $500,000 or something? And those are the things that would go in the clawback. And you're not going to be able to get him to put some, it's probably not going to be tied to profit, because he could say, well, you spent this on marketing, or it's got to be stuff that like reasonably are within the trajectory of the business when he handed it off to you, not something you could intentionally crash. You see articles all the time in like Business First and stuff about owners suing each other, or like there's a company locally where the CEO they hired a CEO and he hit a bunch of targets, and now they're suing him for a clawback of a bunch of bonuses they had paid him because they feel like he had intentionally pushed the financials towards hitting these numbers at the expense of the future, perhaps. And you got to, at the end of the day, unhappy people will be not that the people themselves are unhappy in their hearts, but if you're unhappy with the transaction, there's no amount of legalese that you can write that will make you feel better. But you have to, like you were talking about with the operating agreement, or the not operating agreement, or however you call it, like the same thing is true for the contract and a clawback and these other things. Yeah, you want to live in a world where the last time you see it is when you sign it and the deal closes. But you have to have the words in it reflect the other world, where it becomes the most important thing for settling what happened. And that's a clawback can be an important part of that.
Yeah, it's a great way to get around some of those more questionable transactions, that you do really have a good trust for the owner, the seller, that things are what they're saying, but it's not provable on paper. But to cover yourself, you could do a seller note and put those clawbacks in of, well, hey, if this revenue doesn't really show up, or if those customer relationships that you say are not dependent on your personal friendships with those people over years, like that all just go away because, the seller's been doing the business for 50 years. He goes out to lunch with half the customers every week. They've been childhood friends. And then they decide to use the sale as an opportunity to go shop your services around.
Absolutely.
Let's jump over to your actual transition. So you went from being a business banker to managing a construction equipment manufacturer. What's the for the people that say, I get asked this all the time, like, oh, what was your background in wine and liquor before you bought the store? And it's like, I don't know, I drank occasionally. Like, it's I didn't let that hold me back from jumping into a new challenge. How was that transition for you? What made you think you could run an equipment manufacturer?
Yeah. I would say first and foremost, we spent a lot of time interviewing the key employees here at the company prior to the transition. We had met with them several times, and that made us feel a lot better. People who are in leadership positions at companies will know that on a day-to-day basis, you don't need to know. You need to know about your industry. You need to know what's going on, but uh, I don't handle the supply chain. There are people whose entire life is inventory planning and supply chain and procurement and all of these things, and they work here and they're great at their jobs. And I don't need to be an expert in that, right? Like, how does Jamie Dimon run Chase? It's not because he's an underwriter. He knows how it works. He's a great banker, but like, you have to trust the people that are there. And Midland Machinery has 23, 24 employees. There were 16 when we bought the company. And, you at something that small, you can know everyone and still not have to do everything all the time. And so that's a big part that I would really encourage people to do, is to make sure that you're comfortable with the team. And do you feel like you could be a leader of that team? Like, I love being the guy. I love being the captain of the team. Like, anything that I'm doing, I'm that kid who's raising his hand. I've been that way my whole life. Like, much to the chagrin of Michael at times, he rolls his eyes at me and he's like, "Oh, there goes Chavez again." He calls me Chavez. Like, there goes Chavez again. Like, I love it. I love that part of it. And I knew that it was a big enough company. And this is one of the things that was important to us, is I wanted it to be a big enough company where I felt like I could be the leader without having been in that industry for 20 years. I know small business really well, but I don't know construction equipment. Turns out it's a great industry, by the way. Like, everybody's really friendly. It's actually really small for like the dollar size of the industry, deer and cat, and it's an unbelievably large industry. But the people who are in it, that are at the dealer conference, the manufacturers conference, the World of Asphalt that we go to, like, you see the same people. There's not that many really. It's a lot of fun, and I've gotten to enjoy being the captain of the team without showing up, and I don't have to act like I've got 20 years experience in the industry. I'll be honest with people and say that there are times where I feel a little overwhelmed by how much people do know about the industry, and it's clear that I don't. And nobody has ever judged me for that or given me a sense that they're throwing me some "you don't belong here" shade or anything. But sometimes even, we've been interviewing some people recently for an important job here, and they've got a lot of experience, and they're all my age or older, and they're impressive people, and they're talking about the history and this and that machine, and I'm like, wow, these guys know a lot, and which is why I'm excited to hire one of them to come to Midland, because it'll, like, we're exiting our transition phase. But I just came in, and you have to be humble. I don't know if that's a word a lot of people use to describe me, but I know a lot. I'm very aware of what I don't know. That's the way that I view it. I love asking questions. It's one of the reasons I love that banker job. Like I said, I want to know everything there is, and I especially want to know it about small business, microeconomics, why this works, how it's all stood up. I want to know so much about that. And I just sort of came in, and we were honest with people, like the kids with our hands raised, like, well, how does that work? Yeah, we're the new ones. Like, tell us this, tell us. And people are like, yeah, here, let's introduce you to these people. This is how it works with the dealers. Don't let them tell you that. Like, it takes a certain amount of comfortableness of admitting I'm not here because I'm an expert in the industry. I'm here because of the other skills. And just like your experience, like I drank a little, like I know that pavers are different than excavators, but that was all I knew when I started here. And yeah, it's not it. After 2 years of due diligence, I knew a lot more about the road widening industry than like the average American at that point. But yeah, you just have to be comfortable with not coming in and feeling, this is such a cliche thing to say, but like not feeling like you know everything already. Like, if you come in and you do that, the people that are working for you aren't going to really respect that. Maybe you do know everything already, and then God bless. But like, they're not going to respect that. They're going to sniff it out. People don't like when somebody is putting on airs or like acting like they know everything and they don't. People sniff that out. Just be yourself and be genuine. And if you don't know, ask and say, "Hey, I don't know what you're talking about," or "Can you tell me more about that?" And People like talking about, I mean, this is why I'm here, right? And this is why other guests have been here. You're like, who wants to talk about this stuff? I'm like, I would love to talk about, people like to talk about what they're passionate about. And yeah,
Yep.
they'll tell
And
you, they'll tell you,
yeah,
just ask.
yeah. And I can vouch for you asking questions. I remember, from your days as a branch manager and a business banker, and you always asked questions, just and not in like an inquisitive way, not in a like I need I need to dig in because this is my job kind of way. It's just a natural curiosity of how things worked and how business worked and what was working, what wasn't working, which is a great way to approach kind of anything in life, but especially a business. And then you talked about the team, having a great team around you is super important. I mean, some people are buying smaller businesses that might not have a team, but you said you were specifically looking for something that already had good people in place. I think it was Henry Ford who famously had a room full of reporters and told them that they could ask any single question they had about the automotive manufacturing process, the company, whatever it was, and he would answer them. And when they started asking him questions, he just started pushing buttons on his desk and called in the various team members that could answer the reporter's question. Because he didn't need to know everything. I don't know if it's true. I heard it somewhere. I like it.
We could agree that we like to think it's true.
Yep, exactly. So you can start installing some buttons on your desk for the future.
Yeah.
What about like the systems processes? So like before you took over, was there stuff in your due diligence that you had already identified that, all right, these are some areas that we're going to address immediately or in the short term, medium term, and how did you decide on those types of things?
Yeah, there certainly was. The previous owner of Midland owned it for 20 years. He bought it from his older brother who had owned it for 20 years, who had bought it from his dad who had owned it for 20 years and founded it. And when people talk about, set in their ways and that type of thing, and, everything just sort of like there's nothing written down. There's no processes anywhere. There's just the person in the job who knows what their job is and they were doing it. That's Midland Machinery. Well, it was Midland Machinery. And everything needed to get done. One of the main ones that we focused on, this was still like COVID-ish. Certainly COVID supply chain was still a very big thing. I buy components from John Deere and Dana and Carrera are big axle suppliers out of Italy. The supply chain was a very real problem. That was the one where we really focused on getting our arms around. The previous seller had, and this is something people will encounter is, and this ties back to a good answer to when people are trying to tell you about reasons the business is worth more or things, that there's always the owner's not paying much attention to it is a line that you hear a lot, right? And that's their explanation for why the financials are going down. Ours didn't have the financials going down, but his lead times were really long. We needed to ramp up production and we needed to bring in more inventory to do it. And customer service was on the list too, largely related to availability of parts. And so those were the areas where we started. Customer service is a pretty straightforward one, like SLAs and more people on. We hired another person, like having service level agreements of like internally, if a customer emails you, how long do you have to get back to them? If somebody picks up the phone and leaves voicemail, because we're a small company, like there's not always somebody at the phone necessarily. I hope my customers aren't listening, but like, how long do you have until it's too long that we didn't get back to them? So those were some of the areas, and definitely the supply chain was a big part of it. There was, X level of inventory when we bought the company. We're at 3X now. And do I wish it was lower sometimes? Yeah, inventory costs money, but our production time is down, our lead time is down, and that has resulted in more sales. The company has grown significantly since we acquired it. Even from pre-COVID years, it's grown significantly. And I attribute a lot of that to our process around doing a better job of making it easy to buy one of our machines. For people who don't know the construction industry, it's a distributor model. I don't really have more than 25, 30 customers. I sell, just like you buy a car from a dealership and they've got Dodge and Chrysler and whoever on their thing. it's the same idea. You go to an equipment place and they've got their big brands, which are not Midland machinery. They've got, big excavator line, hopefully a flagship paver line. And then somewhere down near the bottom or at the bottom of that list is Midland machinery, which is a road widener. And I want it to be easy to get our machine. I want it to be, and this is a lot of the way that I treated banking. Like small business owners are busy. And like if they email you now, it's because they're thinking about banking. They finally are thinking about banking. Like I hated when I missed their calls. I hated if I was out doing something and I didn't get back to them right away on an email. Like the number one thing that you could do is be responsive. And that's the way we treat our sales process. We want to always be, when road wideners are on somebody's mind, we want to be there. There's only really 2 manufacturers in the whole country, and we're one of them. The other one's Giant. So they don't make a lot of road wideners, but they're a giant company. And that's the areas that we focused on in our processes. And it's gone well. And now we got a couple quarterly rocks of some, we're getting further down the list. It's part of the US model is having a proven process for a lot of things. I should know off the top of my head what the 3 are that we're working on this quarter, but that's somebody else's job, right? Like it's my planning and finance guy. He's got those and they're not, he's going to show up at our quarterly meeting next week and he's going to say, did I get these done or are they not done? And the expectation is they're done.
So or he would have been reaching out for help prior
right.
to.
We ask I only have 1 meeting a week. That's one of the best things about owning your own business, compared to working at a giant bank. M&T says they're a regional bank, but like M&T is way bigger than a regional bank at this point. I'd only go to 1 meeting a week. Leadership team, 90 minutes, and we look everybody in the eye and say, are your rocks on track or off track for this quarter? And if they're off track, why? And do we have a plan to get it back on? And if they say it's on track, we move on. I don't ask about it,
Yeah. Nice.
So
awesome. Did you, like some of these changes that you made, did you come in day one, guns a-blazing, and tell everybody how it's going to be, or how did you?
No, I'm assuming you're hoping that answer was no, and the answer is definitely no. You gotta really prove yourself to people. I'm a big believer in trust and personal relationships, and and also we don't know anything about construction equipment for that matter, and owning a manufacturing company. And no, it was 6 months of learning. We didn't even roll EOS out for 6 months, and that was just like the first initial meeting, right? And we had earned some trust with the leadership team at that point, and then the leadership team started meeting and doing that. And it wasn't really another year until we really rolled it out to the company and said, hey, these are our goals. And so we share the quarterly goals with people now, and they know that our 10-year goal is to make X machines, which is a pretty big number. And I was nervous of sharing it with the company because I thought it was such a big number that people were going to be like, these guys are crazy. Like they don't have a plan. Like I need to get out of here because it's going to get bad. And now we've got, instead of the thermometer, we've got a road up on the mezzanine in the shop, and there's a little sticker picture of a road widener. And as we sell machines, it like widens the road a little further, heading towards that number. Like everybody knows that's what we're working towards. If things are really broken, if you're in a real turnaround scenario, then I would come in and it's a cliche, move fast and break things, right? Like act fast and whatever it is. I would say ours was more of like the gas pedal had been let off, and we just wanted to like start pushing it down, but absolutely not slam it down. I don't like making mistakes. I don't like, and I think that the number one way you make mistakes is by rushing. And so, when you are in the trust of people, they'll give you the room to say, hey, I want to try something, and it'll go better for you.
Yeah. A couple of things I want to just touch on that you stated there is I assumed that you didn't go in guns a-blazing, and that's the power of buying a profitable business from the start. Like you don't need to make radical change or move fast and break things, like you said, because it's not a turnaround situation. It's not a failing business, and it gives you that space and that runway to take your time, earn that trust of everybody before you, because employees are generally, you can promise them, everybody can promise them that their jobs are safe and that everything's going to be good, but they're still nervous. Ownership transition is a big deal for a lot of people. And so to let them get comfortable with you before you started slowly rolling things out, and then that vision, like sharing that big number, that like crazy idea with the rest of the team, is something. There's a book called Vivid Vision that talks about that. There was the COO of, I think it was 1-800-GOT-JUNK, where he talks about like saying how big his vision was, and like talking about how many X number of trucks he wanted out on the roads throughout the U.S. and Canada, and people were astonished, but they were excited. Like it got them motivated.
Really?
Like they're like, oh man, we like, and it also woke up some of his suppliers, and they called him up and said, hey, we heard you have this crazy goal. There's no way we're going to be able to supply you with that many over the next X number of years. So it also just like logistically, it gets people excited, but it just
that's
opens
cool.
up logistics.
I like that.
If you said that, even if somebody thought your idea was crazy of how many machines you wanted to build, somebody might say, yeah, this is awesome. Love to do it. But our axle manufacturer, there's no way they're going to be able to do that. So there's the bottleneck. And then you go figure solve that problem.
That's part of what's nice about setting the 10-year, I don't know what it's called, 10-year vision or something. And then you set, okay, well, let's say if 3 years from now, what does 3 years from now look like? And once a year, you reset what 3 years from now, because you'd say, well, if we're going to be here in 10 years, where do we need to be in 3 years? And they're like, well, where do we need to be next year? And then you set your quarterly goals. And I like that a lot. In one of the books, I don't remember which one, they were talking about your 10-year target or 10-year, you BHAG. People use that phrase a lot, the big, hairy, audacious goal. Nike's goal was to crush Adidas. And I was like, man, I love that. That is a great goal. And so for a while, as we were kicking around what ours was going to be, there was a competitor of ours that's a very small competitor in our exact space. But anyway, they're probably 10 times the size company of us, 12 times the size. I was like, our goal is to acquire them. Like, that's what I wanted our goal to be. And then we backed down from that goal. But I love that idea of like, I don't know, if you don't aim big, you're certainly not going to get there. So yeah, I encourage people to.
Got a couple more quicker questions. I want to be respectful of your time here, but what's something for people that might be intimidated or haven't really intimidated the whole process? Because as we described, there's hurdles, there's complications. What would you say to them to get over those hesitations?
Wow, that's a tough question. Are you thinking more along the lines of intimidated of the should I quit my job and buy a business, or intimidated in the I found a business, or if I find a business, how would I actually get it done?
The latter.
Okay, if I found a business, how would I get it done? I think for that, I'm a believer in lists and compartmentalizing and like understanding that that is maybe something where you're like, okay, the big hairy goal is I'm going to buy a business, but really it's just a whole bunch of small steps. Like you got to start talking to some banks and like get a small sense of like who might do this deal. And then they're going to give you this long list of paperwork. And that's where some people are like, I'm out. I can't do that. This scares me. Or like, how am I ever, I don't even know what that one means. And like, okay, well, they give you a list of 15 things. Like start with one and then the next one. And then, okay, how am I going to negotiate with the seller? I'm not a negotiator. I'm not, okay, well, like I got to find a lawyer. I got to find a CPA. Like each one of those things is just like one thing in its own vacuum. And I would really encourage people to break it down and treat it like a long checklist. There will be things that come up that are not on your list that you will have to deal with, but there isn't any. It's almost the same as buying a house, which maybe when you're like, think about if you tried to tell a 10-year-old they need to buy a house, like it would feel like they have no idea how to do that, right? There's no concept. But if you've ever bought a house, you realize that there's just a process. And yes, it's a pain. And yes, it feels opaque and you don't always know what's going on. But once you kind of understand, like, okay, I just need to do this and then this will happen. And I need to do that. And you're like, wait, I thought I already had my approval. Like, no, you had the pre-approval. Now you need to send us all the same paperwork, updated for 3 months later. And we're going to ask a ton more questions. You're like, okay, just do it, right? Just do it and do it the way that they want. And you can be mad and you could be frustrated and your seller will frustrate you and people around you will doubt you. Like, just do the thing that's in front of you, be prompt, be thorough, and people do this every day. It's just like buying a house. It's just different. And it gets done every day. There's lawyers, there's accountants, there's people, there's bankers. They're all in the interest of getting it done for you. One sidebar piece of advice somebody told me this. There are lawyers that are deal makers and lawyers that are deal breakers. And just figure out quickly that yours is a deal maker. And if the other guy has one that's a deal breaker, you can't change their lawyer. You just have to be aware, and you're going to have to navigate that. And it can be difficult. But don't.
Yeah.
Yeah, don't have to eat the right? Don't eat the elephant all at once. People are gonna get to the end of this episode. They're gonna be like, "Wow, that guy like referenced a ton of cliches. He was just like a hyperbole machine."
That's fine. I love cliches, and I love those little slogans because they stick in your head. And that's why that's why you use them. That's why
they're around for a reason.
And you like breaking stuff down into little bite-sized pieces into little checklists is such a great tip for pretty much anything in life, any goal that you're trying to accomplish. Just being able to look at the most important next little task that you need to get done and doing that before you think about the next one. And that advice on the lawyers as well. And I think that goes with like anybody you bring in on your team, and circles back to something you said earlier in this interview with looking for reasons not to do something. Like, there are people out there that will always give you lists and lists of reasons to not do something. Your uncle, your aunt, your mother, other business owners that own businesses in the same industry will all at some point tell you you're crazy or find the million things that can go wrong, even though they don't have experience in it. So just, focus on the positives. It's great to address the negatives. You do need to take a look at, okay, what can go wrong here? How bad will this make my life if it goes wrong? But you need to focus on the positives and really move towards the finish line if you want to succeed.
Somebody tells you 90% of small businesses fail within 10 years. Just, you don't need to listen to anything else they're telling you about it, right? Like you don't need any advice from that person.
Yep. Yeah. They're not going to be your cheerleader. So you may as well move on. Well, I really, really appreciate your time, and we're going to have to get you back on at some point to really take a deep dive into SBA lending, because I think that your experience and the fact that you don't work for a bank anymore and can be a little more candid will be valuable to listeners. But for now, is there anything you want to leave the audience with, or if you want to be contacted, or if there's anything, I doubt many people are in the market for a road widener right now, but you never know.
You never know. You own a paving company, or you're looking at a paving company. No, I don't think so. I mean, I am happy to answer questions. I love this engagement. I'll say to people, the thing I miss most in this job is being around people like you every day, right? I was around 12, 13 other bankers who did what I did and saw the world the way that I did. And I had hundreds of clients and, maybe 50 that I interacted with regularly that I really enjoyed, maybe half of them. And I miss that a lot. And so, if you do this, it will feel a lot different and it will be lonely. And I certainly, if people have questions or whatever, send them to you, and I'm happy to answer questions. Or you could rip off a question. You could do a Q&A at the end, be like, "Oh, we asked Aurelius this question, and here's the answer." I love this kind of engagement. I'm happy to do it. But be prepared that nobody's going to care about it as much as you are. And that's going to feel a little lonely at times.
Yep. Yeah. Great point. That is, to close on another cliche of entrepreneurship, is a lonely path, but there's a huge network of other business owners out there that are all feeling the same way. So don't hesitate to reach out to people. Like you mentioned earlier, we all love talking about what we do. And even if it's not in the same industry or the same thing, it's still all relevant. We all have very similar issues in human resources, cash flow, and supply chains. And so we can all help each other. Don't hesitate to reach out to me. If you have any questions for Aurelius, feel free to send them over, and I will pass him on, or ask him the next time I get him back on to do a deep dive on SBA lending. So with that, thank you very much for being here, Aurelius. Really appreciate it. Appreciate your time and your insights, and look forward to talking to you again sometime soon.
Yeah, thanks a lot, sir. This was great.
Awesome. Cheers.
Thanks for listening to Business Buying for Financial Independence.
If you're serious about owning your time and building long-term wealth, make sure to subscribe so you don't miss the next episode.